Global markets are mixed as US inflation rises, with investors anticipating more rate cuts. Argentina's monthly inflation hits a 3-year low, suggesting President Milei's aggressive policies may be yielding results. And we examine Europe's declining birth rates as Russia, facing its lowest in decades, steps up incentives to boost population growth. Hello, I'm Taiba Aydin with the latest business and finance news here on TRT World. Asian markets traded mixed on Thursday after US inflation data for October reinforced expectations that the Federal Reserve would cut rates again next month, rising for the first time since March. While inflation has decreased significantly from its peak at a 4-decade high, it rose to 2.6% in October from September's 2.4%, in line with expectations. Core inflation, which excludes food and energy costs, remained steady at 3.3% year-on-year. Monthly gains indicate ongoing price pressures, suggesting inflation is not easing significantly in the near term. The housing sector played a major role in the rise in inflation, with home prices up by 0.4%. This rise is also partly due to the interest rate cut in September. Treasury yields and stock markets responded positively to the inflation data, easing fears of an inflation spike post-election and providing reassurance to investors. The Fed aims to keep inflation in check without harming demand. However, President-elect Donald Trump's proposed tariffs, deportations and tax cuts could raise inflation risks, adding uncertainty to the Fed's ability to meet its 2% inflation target. Li Xingan is a financial market strategist consultant to XNES. She joins us now from Kuala Lumpur. Good to see you, Li. Now, firstly, what led to the uptick in US consumer prices last month?
Hello, first, thank you for having me. Right, so we can see that the US inflation remained relatively firm. It also came in line with expectations. Right, in terms of the core prices, it rose by 0.3%, and it's the third straight month of increase. And I think a big part of it, right, we saw that was driven mainly by shelter costs, and that accounted for more than half of the overall increase. Right, rent also, especially with also it remains a key driver in terms of the higher costs and also reflect the tightness in the housing market, as you have mentioned. We also saw a rebound, right, in car prices, and that also jumped and also recorded the biggest rise in over a year. So this also came on the back of several months of decline. So other areas like airfares and hotel prices also increased, but partly it's also due to disruptions from the recent hurricane. Right, so I think that that's a big part of the driver in terms of the inflation figures in October.
Right, the reading was in line with expectations. How could this influence the Federal Reserve's next rate decision?
Yes, so like as you've mentioned, right, the reading came largely in line with expectations, and we can see that while some of the portions actually progress slower than hoped, right, officials in general are still confident that inflation is moving in the right direction and towards their target. I think the Fed will continue to monitor, right, apart from just inflation, also the jobs data closely to guide their direction. But despite that, we're also seeing that markets are aggressively pricing in the chance that Fed would actually start to impact or rather slower the pace of easing, right? So even though we are seeing expectations for a rate cut in December FOMC meeting, right, dollar has been on a very strong rally, reflecting that shift in market sentiment. I think that's also growing anticipation that with a Trump 2.0 administration, there is anticipation or expectations for inflationary policies coming through, as well as higher growth with the tax incentives that he mentioned. So this could also disrupt the Fed's easing plans. And if inflationary pressure pick up, right, then we could see a much slower pace of easing by the Fed, and that could also impact or support the dollar rally.
And how are markets reacting to core inflation holding steady? What does this signal to investors?
So in general, when core inflation holds steady, it shows that this is in line with market expectations. So in such a sense, right, given that the Fed is highly data dependent, this also means that they're likely to be on track for the easing, right, in December.
Okay, Lee Xingan, we will have to leave it there. Thank you very much for your analysis.
Thank you for having me.
Now, after months of aggressive cost-cutting under President Javier Milei, Argentina is finally seeing some relief from skyrocketing inflation. But that progress has come at a cost. Consumer spending has plunged, leaving millions still struggling to navigate a harsh economic landscape. Omar Baccalolo has the story.
When Argentine President Javier Milei took office in December 2023, he promised to pull it out of a dire economic crisis. The self-confessed anarcho-capitalist brought a chainsaw to his campaign rallies to symbolize his commitment to cutting public spending. Within months, he devalued the peso by 50%, cut fuel subsidies, and reduced government ministries by half. Now, almost a year into his right-wing presidency, those drastic measures are finally starting to show some results. Inflation is Milei's top priority. Prices rose 2.7% in October. In most parts of the world, that will be a huge increase in just 1 month. But in Argentina, it was the lowest monthly rise in 3 years. On an annualized basis, inflation is down to 193%, dipping below the 200% threshold for the first time in nearly a year.
It's interesting because wholesale inflation ran at 54% per month when we arrived. Today it is running at 2% per month. It travels less than the crawl plus imported inflation. Therefore, we are technically close to zero monetary inflation.
But while the numbers are getting better, citizens still tighten their belts to make it to the end of the month.
The price of meat hasn't gone up this month because there is very little consumption. As consumption goes down, sales also go down. And well, it's a bit complicated. Unfortunately, we started November with a small increase in chicken and meat purchase values. We are absorbing this increase, but there will come a time when we'll not be able to absorb it anymore.
Perhaps inflation has not increased so much in the last month, but the reality is that people cannot buy domestic consumption. That is something very clear. I think there is no doubt about it. Now the increase in prices or inflation is not being seen, but there is not much margin for it to happen, and there is no one to buy either.
Despite Milei's efforts to control inflation, over half of Argentina's 46 million people are now living in poverty. The austerity measures have also deepened a recession that began last year, with the IMF expecting a 3.5% economic contraction for 2024. So, while inflation may be cooling, critics argue that Milei's few wins have come at a steep cost for Argentina's middle class. Omar Baccalolo, TRT World.
For more on this, we're joined by Latin America analyst Colin Harding in Manchester in the UK. Good to have you with us, Colin. Now, it seems that Milei is following through with his promise of pulling the country out of this economic crisis, but at what cost?
Well, as we've heard, purchasing power for a lot of people has gone down. But he paints a rather different picture. He reckons that the only people really suffering from his policies, his austerity policies, are what he calls a political caste. And this is the clientelistic system which was followed by the previous government, the Peronist system, very much depended on high public spending, subsidies, favouring unions and union bosses. He reckons that this just became a very corrupt system in which a few people enrich themselves at the expense of the public purse. He reckons all this is going, and in fact the majority of people are not suffering. Wages and pensions are keeping pace with inflation, but people paint a very different picture depending on their political point of view. One university in Buenos Aires suggests that 3 million more people are now living in poverty than before. But the government says, well, we've defeated inflation. This is the most successful stabilization program ever, and the future is going to be marvelous.
Right, and we are seeing protests across the country about these austerity measures. How are ordinary citizens being impacted?
Well, there's been huge cuts on the public payroll. I mean, the government's policy is to either privatise or close down about 41 public bodies. It's things like the national airline, the national oil company, and so on. Energy subsidies have been cut. Can be done by decree. The president doesn't even have to get Congress to agree. The opposition's been trying to resist this, but unsuccessfully so far. So purchasing power has gone down, as we heard in that clip, very much so. And this is means a very, very tough time for a lot of people. Although the government says this is really restricted to a few groups, and most people are not suffering.
Okay, Colin Harding, we will have to leave it there. Thank you very much for your time.
Pleasure.
Now a quick look at some of the other top business stories from around the world. As Donald Trump heads to Washington, the United States has posted the largest deficit for the first month of a fiscal year since the pandemic. The Treasury Department reported a federal budget deficit of around $257 million in October, up 287%. The shortfall was largely fueled by deferred tax payments due to natural disasters, mainly in California. A France court has ordered Google to stop a project that would see the company allegedly suppress some media articles in its search results. Google says the practice is because some articles clash over rights for use of online news. They're also saying the project is a time-limited experiment to see how users' search experience may be influenced by the change. Tech giants Nvidia and Meta are in Supreme Court cases that could reshape securities fraud lawsuits. Both argue for stricter requirements for investor claims, but justices expressed doubts in recent hearings. Nvidia faces allegations of misrepresenting demand for chips, while Meta's case involves alleged non-disclosure of the Cambridge Analytica breach. These rulings may set new standards for future securities cases. And a historic diamond necklace, possibly linked to Marie Antoinette's downfall, sold for $4.8 million at a Geneva auction. Initially estimated at $1.8 to $2.8 million, intense bidding drove up the final price. Sotheby's revealed the 18th century jewel has emerged intact after 50 years in a private collection and may include diamonds from the scandalous diamond necklace affair that helped spark the French Revolution. Despite headlines suggesting a slowdown, the global electric vehicle market is once again surging, setting record sales for the second month straight, with China leading the charge. 1.7 million EVs were sold in October. That's up 35% year-on-year and 3% on a monthly basis. The Chinese EV market shows no signs of slowing down. It made up the largest share last month with 1.2 million units sold, a record monthly increase of 6%, while soaring more than 50% year-on-year. Despite new tariffs being imposed by the European Union, the US and Canada, China's BYD led the market with 500,000 vehicles sold, the highest of any car maker. High costs and competition from Chinese imports are putting pressure on European manufacturers. EV sales in Europe grew just 0.8% year-on-year, but saw a 14% drop from September. In countries like Japan and Germany, home to some of the largest traditional automakers in the world, sales of EVs have declined. Europe's biggest car maker, Volkswagen, is planning to close 3 plants in Germany, while Nissan plans to cut or shut down some European operations. Meanwhile, Chinese car makers like BYD are eyeing expansion in Europe. For more, we have Steve Fowler joining us in London. He's an automotive editor and consultant. Good to see you, Steve. Now, what factors are driving China's dominance in the global EV market?
Well, good morning. Well, firstly, I think there's a couple of things to think about. And one is that there's greater consumer acceptance of these Chinese brands and these Chinese models than there probably is political or industry acceptance. Ultimately, this industry is driven by people who want to buy these cars, and people are quite happy and quite accepting of these cars because they tick the boxes that people need these days. You know, I've got a car out of my driveway at the moment. I can look and see it now. It's called a Skywell. It's another new brand. Now, while it might not be the last word in dynamic excellence, the ride quality is not great and the range isn't fantastic, the value that it offers, the quality that it offers, is what buyers are finding really appealing. And the technology too. These Chinese brands are real technology leaders, certainly compared to some of the, shall we call them, legacy Western brands.
And how are European manufacturers responding to the competition from Chinese EV makers?
Well, they're very much trying to learn as much as the Chinese car makers have learned from the European car makers. The European car makers are trying to learn from the Chinese brands. A little while ago, I was talking to William Lee, who's the boss of Chinese brand NIO, who was talking about how they have to have software updates in their cars every month or every couple of months. They have to produce new models every couple of years. Now, these are things that the Western car makers have got to learn and have got to do, and they've got to talk more about things like software-defined vehicles, putting the computer at the heart of the vehicle, which is what a lot of the Chinese brands are doing, and which a lot of the Western brands are struggling to do. So it's all about learnings, developing cars quicker, and ultimately, as I said, producing cars that the consumer wants at a decent price.
And with EV sales surging at record rates in China, what are the main challenges for Western automakers looking to capture market share there?
I think it all comes down to understanding the consumer and what the consumer wants. Value is more important than ever, I think, to consumers. And that doesn't necessarily mean something that is cheap, although that does help. And if you look at what some of the European car makers are doing now, we're seeing some low-cost vehicles come to the market. Citroën EC3, I've driven the new Renault 5. We've got also the Dacia Spring, which in the UK sells for under £15,000. A great little car, all electric. So it's about understanding what the consumer wants, upping the game on technology, and updating those cars regularly. So it's about listening to the consumer and learning from China.
Okay, Steve Fowler, we will have to leave it there. Thank you very much for that analysis. As Trade Week UK 2024 kicks off, industry leaders, policymakers and entrepreneurs gather to explore new opportunities in a rapidly evolving trade landscape. Tulay Kalyon Haznederoğlu has more.
This week, the UK celebrates International Trade Week. It's an event aimed at boosting international business and creating global partnerships. Businesses of all sizes are participating in a series of workshops, networking events, and seminars designed to share insights on the complexities of global trade.
This is International Trade Week that we're sponsoring as part of our partnership with the DBT, an opportunity for small businesses, small and medium-sized businesses to come and find out more about international trade, how they can overcome perhaps some of the barriers or some of their fears about expanding internationally, and just learn more about, what are the opportunities for their businesses, what support is available, how can we help them, what are the resources that they might need.
This year, the focus is on global reach and digital trade, and on companies just starting their digital journeys. Santander UK's latest trade barometer report shows only 36% of businesses feel very confident about trading internationally. 52% of businesses say international trade is increasing importance to reduce economic challenges. And 58% of exporting businesses expect a quarter or more of their revenue to come from trading internationally in the next year. With over 100 events planned throughout the week, the focus extends from small businesses to large companies.
Been running for about 8 years now, and during the course of that we've seen a lot of research and feedback on the lack of confidence that businesses have in expanding internationally, mainly because they feel there are lots of barriers, the challenges are sometimes too big to overcome. But what we've actually seen, although confidence is quite flat, those who are most confident has actually increased in this last wave.
The event also aims to unlock global opportunities for companies of all sizes and sectors. As the world becomes more connected, international trade continues to evolve. Countries are forging new alliances and adapting to shifting markets, while trade weeks are organized to help businesses to embrace these changes. And as International Trade Week unfolds, many countries from all over the world seem eager to build strong international relationships to drive the global economy forward. Tülay Kalyon, Haznedaroğlu, TRT World, Brighton, UK.
As Russia continues to record its lowest birth rates in decades, the government has accelerated incentives for Russians to have more babies in what officials have called a special demographic operation. Legislation will be introduced to encourage a more traditional outlook amongst prospective mothers and fathers. Dasha Chernyshova has more from Moscow.
This is a prescription for a blood test that will determine the level of anti-Mullerian hormone, which is used to check a woman's ability to produce eggs that can be fertilized for pregnancy. Russia's state health system invites all female Muscovites aged between 18 to 40 to take it and use the procedures for freezing eggs or artificial insemination. This is just the latest incentive to encourage Russians to have babies in what is a shrinking population.
I don't have kids or family. It is in fact my main goal to start a family, but I can see it's possible now. It seems too difficult. Most importantly, a family needs financial support, and that's not quite sufficient. A place to live is needed for the kids as well, and they also will need money. With my current salary, I won't make it if I had a child.
A good life balance is required, and stability. I just can't introduce any person into life when I don't know what's going to happen tomorrow.
Since I'm a mom of a special needs child, there is not enough parental support from the state. School specialists who can work with such kids. I think this area should be expanded, because there are many such kids today, and this is where support is needed.
A study from Higher School of Economics University showed a quarter of Russians decided to postpone or give up having kids after 2022. They say current situation is unstable or cite financial troubles or even note insufficient support measures. In the first half of this year, Russia's population recorded its lowest number of births in 25 years, a situation the Kremlin described as catastrophic. The fear is that Russia is running out of Russians. There are plans to increase state maternity payments, but some experts say the government should at least double the spending on natal support measures and make sure they cover all stages of parenting.
There's been significant progress in demographic support over the past 20 years, but it is insufficient. The share of natal support policies, family support measures is around 1 to 2% of the GDP, depending on the estimate methods. That is very small. That's amongst the least supportive countries in this field. The most supportive ones spend at least 4%.
Russia's demographic problem has deep roots. It is the small generation of the 1990s that is having children today. But there are other issues too. Lawmakers now suggest introducing a special demographic operation, including legislation on issues like banning promotion of child-free lifestyles and encouraging on students to start families early. Dasha Chernyshova, TRT World, Moscow.
Belgian farmers have jammed up streets across Brussels with tractors. They're demanding the government not go through with a deal between the EU and Mercosur countries. The agreement may lift tariffs from these countries, making local agricultural products less competitive. Emre Boz reports.
These tractors are not here to work. Instead, they're protesting for better pay and working conditions for farmers. Leading the protests in the capital, Brussels, is the Walloon Farmers Federation, denouncing a proposed deal between the EU and the South American trade bloc, Mercosur. They fear the deal will reduce tariffs in the country, dropping local prices even further. And as prices fall, so too will incomes. Market intelligence firm Reportlinker says that agricultural production in Belgium is expected to decline by 0.1% every year from 2022 to 2026. This is bad news for the economy, which is posting already underwhelming growth, staying flat at the 0.2 to 0.3% growth range.
Let's take the example of bovine meat. They can produce bovine meat for half the price because they don't face the same sanitary and environmental standards. So this meat, which is going to come here at a very low price, will completely break the meat market in our regions, and our producers will have to close down their businesses because we won't be able to be competitive.
Farmers are also fed up with strict EU environmental rules, which are slowing down agricultural output. And analysts are saying that the government is looking more and more likely to move forward with the deal.
In about just under 2 weeks' time, there will be a final meeting in Brazil to kind of cross the T's, dot the I's on this deal. A week after that, a formal announcement in Uruguay.
If this new deal comes to fruition, it may mean more agricultural products at cheaper prices, flooding the Belgian economy. This will kill demand for local products. All these issues piling up may prove catastrophic for Belgium's already declining farming industry. Emre Boz, TRT World.
Well, that's all your business news for now. I'll be back in the news hour for the latest. The Newsmakers is next.